Namaste, welcome to Arthaniti, where we discuss money and money matters to help you in your investing decisions. All that glitters is gold. Well, Kalyan Jewellers has been proving this adage wrong. This adage, which is typically used to caution against deceptive appearances, has taken a completely new meaning when it comes to the performance of Kalyan Jewellers stock. Once a shining star in the retail jewelry sector, this stock has seen its luster fading in the opening weeks of 2025. The company, which had been riding high on a wave of investor optimism, saw an all time high of 794.60 on 2nd January. But it has seen a precipitous decline ever since. In the last 2 weeks, the stock has plummeted 36%, wiping out 30,000 crores of market capitalization. Today, the stock stood at 501 levels. The reasons for such sharp fall have left investors and market watchers perplexed, scrambling to understand the reason for the mighty fall from grace of this biggest retail jewelry chain. As we delve into the intricacies of Kalyan Jewellers, we will explore a confluence of factors that have contributed to this current downturn. From market rumors to financial performance, we will examine what this means to the future of India's largest jewelry retailer. The story of Kalyan Jewellers serves as a cautionary tale about volatility of market sentiments and the delicate balance between growth and investor expectations in the high stake world of luxury retail. Let us study the performance of Kalyan Jewellers stock. Now, today the stock closed at 501.50. The 52-week high of this stock was at 795.40. 52-week low, it stood at 321.95. Right. Now, coming to the fundamental factors, the PE ratio stood at 88.67 in comparison to the industry PE of 85.77. Now, though on a higher side, it is not extremely high, right? The PB ratio stood at 13.25. The market capitalization of the company is around 55,000 crore rupees. Earnings per share stood at 580. Now, some of the reasons for current downturn can be profit booking after a stellar run. The stock has gained nearly 67% in the last 1 year. Secondly, concerns over high valuation after a good rally, and the FNO ban, which is in place because of high volatility in this stock. Now, these are some of the reasons for the current downturn. Let us pan out and have a look at the bigger picture. What is the industry outlook? Now, the global jewelry market is expected to reach 480 billion by 2025. For the 7 year period from 2023 to 2030, it is expected to grow at a CAGR of 4.7%. Now, the jewelry industry falls into the consumer discretionary sector. What does this sector in India look like? Well, experts are optimistic about this sector in 2025, given rising disposable incomes, increasing urbanization, shift from unorganized to organized retail, premiumization brands, and growing middle class are some of the factors which are going to contribute to the growth of this sector. High disposable incomes typically lead to spendings on non essential items. But, however, high inflation, especially in food prices, can have a negative impact on such discretionary spendings. Why? Because consumers would prefer or prioritize essential items first. Some other factors besides food inflation, like slower wage growth in some sectors, changes in consumer preferences post pandemic, are also some of the challenges that the consumer discretionary sector in India face. But despite these challenges, experts are of the opinion of gradual recovery in discretionary spending sector. Why? Because of good monsoon, expectations of interest rate cuts, and government initiatives to boost consumption, given we have a budget on 1st of February. Let us look at some of the key trends which are shaping the industry. Firstly, the rise of lab grown diamonds. Now, I'll give you some figures. As of 2025, lab grown diamonds are nearly 70 to 90% cheaper than their natural alternative. Now, this explains the rising demand for lab grown diamonds amongst customers. As an industry, lab grown diamond industry was valued at 18.9 billion in 2023. It is set to double in valuation by 2025. uh, the market share of lab grown diamonds in 2018 was a mere 3.5%. It became 18.5% in 2023, and it is expected to reach 21% by the end of 2025. The second trend is the shift in consumer preferences. From a bling, people or customers now prefer minimalist and sustainable designs. The third trend which is shaping this industry is the digital transformation of retail. Use of advanced technologies right in various aspects of jewelry business, from design to manufacturing to sales to customer engagement, is changing the way jewelry is sold and designs are created for customers. To give you some examples of use of technology and digital transformation, Kalyan Jewellers has developed a blockchain based digital platform called Digital Gold. Now, through this platform, customers can buy and sell gold digitally with full transparency and traceability. Players like Tanishq have implemented a virtual try on technology on their website as well as app. Carrot Lane, an omni-channel jewelry brand, uses 3D printing technology for rapid prototyping of designs. Now, these are just some examples that I wanted to put forth. Let us look at some of the competitors of Kalyan Jewellers. We'll start with the titan of the industry. Yes, I'm talking about Titan. Now, the share price of Titan today stood at 3,357 levels. 52-week high was at 3,886. 52-week low stood at 3,055 levels. Coming to fundamentals, the PE ratio for Titan stands at 90.78. Compare it with 85.77 and 87 of compare it with 85.77 for the industry and 87 point something for Kalyan Jewellers. It is on a higher side, right? PB ratio stands at 31.34. Market capitalization of Titan is nearly six folds that as compared to Kalyan Jewellers. It stands at 2,94,000 crore rupees. Earnings per share stands at 39.38. Now, what are the strengths of Titan? Well, strong brand recognition is something that Titan enjoys. Trust of the consumers, again, is high when it comes to Titan. Diversified portfolio offering. We know that besides Tanishq, the jewelry segment of Titan, it also is the biggest watchmaker in the company, also has a brand called Fast Track, which targets the young population, and it has a robust online presence. So, these are some of the strengths of Titan. I want to talk about one more competitor, a relatively new entrant in the Indian stock markets. I'm talking about P N Gadgil Jewellers. Now, this stock was listed on the 17th of September 2024. Today, the stock stands at roughly 636 levels with an all time high of 848 and low of 591 levels. Now, this brand is localized, limited to the state of Maharashtra. It has presence in few places outside India, but within the country, their stores are limited in Maharashtra. But given their track record, 100 plus years of track record, and their robust plan of growth, store expansion of 30% CAGR from 2024 to 2027 has helped them garner buy recommendations from various brokerage houses. Motilal Oswal is one such house that has given a buy recommendation on this stock. So these are some of the competitors and how they feature when it comes to jewelry industry in the country. I want to add that I forgot to tell you that the market capitalization of Pune Gadgil Jewellers stands at nearly 8,700 crore rupees. As we wrap up this analysis, it is clear that each of these players have unique propositions. Kalyan Jewellers, high growth potential, but currently facing short term volatility. When it comes to Titan, it is the industry leader, but at premium valuations. PNG, promising growth story, but again with regional presence. Now, in one of the recent earnings audio call, the executive director of Kalyan Jewellers, Ramesh Kalyan Raman, has said that some of the rumors that are making rounds in the market. Firstly, there was a rumor that there have been IT raids at multiple locations of Kalyan Jewellers. The director said that these rumors are absurd and there is absolutely no truth in them. Secondly, there were rumors that the company was going to buy an aircraft. The director has refuted those rumors as well. He added that the company has repaid 450 crores of debt and has distributed 170 crores in dividends. So, like these were this was the commentary from the management of the company. Now, what do analysts say? Well, analysts and brokerage houses, many of them are still maintaining a buy recommendation on this stock. Motilal Oswal has given a buy recommendation with a target price of 875 rupees per share. Citi, again a buy recommendation, target at 810. ICICI Securities has given a buy with 770 as the target. Now, barring a few analysts like Ventura, most of the analysts maintain their buy recommendation on this stock. Whether it is Kalyan Jewellers, PNG, or Titan, the choice ultimately depends on your risk appetite and investment horizon. Consider this: the recent downturn in Kalyan Jewellers might be an investment opportunity for risk tolerant investors. Titan has strong brand value and offers diversification and stability, but at high price. uh, PNG has aggressive growth plans and could yield high returns if the plans pan out well. Remember, this analysis is not a recommendation. It is an attempt to help you make informed decisions. Always do your own research, consult a financial advisor before taking investment decisions. If you have liked this video, please like, share, and subscribe to our channel for more such educational and informational videos. Until next time, stay safe. Goodbye.